Welcome to ForexTV.com's PM Exchange. It's Wednesday, February 20th. I'm Remy Hokie. Today I'm joined by Todd Crosland, President and Chairman of Interbank FX. Good afternoon, Todd.
Good afternoon, Remy.
Great to have you on the show today.
Thank you very much.
Well, we just had the release of the latest FOMC minutes, and that included both the January 30th to 31st meeting as well as the emergency inner meeting. And it looks as though they cut their growth forecast as expected and highlighted downside risks to growth. But earlier in today's session, we got hotter than expected inflation on CPI.
Yes.
And as a result, we saw the dollar supported, and right now we're not seeing euro-dollar that much changed after the FOMC minutes. But going forward, fundamentally and technically, if you could give us your forecast for euro-dollar.
Well, I think we still have a divergence between what the ECB is going to do and what the FOMC and Chairman Bernanke is going to do as well. If they continue to have inflationary pressures in Europe, they're really not poised to cut interest rates as fast as what the U.S. is doing. So I think because of that interest rate differential, we're going to see continued pressure on the dollar until the European Union cuts rates to match what the U.S. has been doing.
Well, speaking of central banks, earlier in the session, we got the latest BOE minutes,
yes.
And as expected, the Bank of England is expected to reduce rates. We saw sterling pull back as a result of this, but sterling dollar is back up in the session. So going forward, what is your forecast for sterling against the U.S. currency?
Well, I think that's the only bright spot out of Europe is the dollar could gain a little bit against the sterling, the British pound. The interest rate differential between, especially if they cut rates again with the Bank of England, that will get closer to what the U.S. Rates are, and then that would put less pressure on the dollar versus the British pound. So I think we'll see continued pressure or weakness against the euro for the time being, but potentially the British pound, we might see a little bit of positive upside for the dollar against the pound.
And taking a look at the broader market in New York afternoon trade, we're seeing U.S. equities back up. Initially, after this morning's housing starts data as well as CPI, we saw the major indexes pull back into negative territory. Dollar yen is currently around the 108.20 level, and we've also seen euro yen up on the day.
Sure.
But going forward, if you could give us your forecast for the Japanese currency, both from a fundamental and technical perspective.
Sure. Well, as far as technically, we have a system called the pattern recognition system. And most indicators, if you look at MACDs or stochastic or moving averages, they're more of lagging indicators. So by the time the indicator crosses to give you a buy or sell signal, the currency's already gone in that direction. And all of the indicators that we have right now are bullish for the dollar against the Japanese yen. Both the 15-minute, the 30-minute, the 1 hour, the 4 hour, and even the day chart are all giving us buy signals on the yen to really go up to the 109 level on the yen in the next week potentially.
Okay, and also taking a look at another market, which is commodities. We've been seeing NYMEX crude oil as well as COMEX gold rally. And in today's session, crude oil, the benchmark contract hit a high of $100.40. But shifting our focus over to the dollar block currencies and also the so-called commodity currencies of the Australian dollar as well as the Canadian dollar, what's your strategy going forward for the Aussie against the CAD?
Well, commodities have been, the flavor of the year so far, and if you look at, oil and gold, especially the Aussie CAD, back to our system, the pattern recognition system, all of those short-term and longer-term patterns have completed, and they're giving us ranges from 93 to 95 on the Aussie CAD. So over the next couple of weeks, we could test the 94.50 to 95 level on the Aussie CAD. So we see some continued upside there.
Okay, and last but not least, before we wrap it up for today's interview, given that we've highlighted interest rate differentials, what's going on in the broader market, and also commodities, where do you think are the best opportunities in the FX market right now, and what advice do you have for FX traders in our audience?
Well, I think it depends if you're short term or long term. I think the signals that we're seeing on the dollar yen in particularly if you're trading the dollar yen or if you're short that pair, it appears that there's 5 or 6 of these signals that have lined up into buy territories, and so we hate to go against the trend, and the trend looks bullish for the dollar yen right now.
Okay, Todd, as always, thank you very much for coming on the show, and we hope to welcome you back next time you're in New York.
Thank you, Remy. Appreciate it.
Thank you. This has been your Forex News with Todd Crosland from Interbank FX. Next up, we have your equities and commodities wrap-up for the day. U.S. stocks ended today's session in positive territory. The major indexes managed to pull back from weakness seen at the opening bell. U.S. inflation data dragged down stocks earlier, but turned positive ahead of the FOMC minutes. According to the minutes, the Fed lowered its economic growth forecast for 2008, projecting GDP growth at 1.3% and 2% this year. In today's data releases, the Labor Department reported that CPI rose 0.4% last month. Core CPI was up 0.3%, and it was the largest gain in 7 months. Meanwhile, the Commerce Department reported that the construction of new homes increased 0.8% to a seasonally adjusted rate of 1.012 million units in the latest month. This follows the 14.8% tumble in December. And building permits fell 3%, the lowest since November of 1991. At the closing bell, the Dow Jones Industrial Average gained 90.04 points, ending at 12,427.26. The tech-heavy Nasdaq added 20.90 to close at 2,327.10, while the S&P 500 gained 11.25, closing at 1,360.03. In the fixed income market, U.S. Treasury bonds ended mixed on the day after the release of the latest FOMC minutes. The benchmark 10-year Treasury note fell with its yield at 3.9%. The 30-year long bond rose with its yield down at 4.64%, and the 2-year note fell with its yield up at 2.09%. Taking a look at energy, NYMEX crude oil futures rallied in another volatile session. After the FOMC minutes and the Fed's growth forecast, crude topped $101 a barrel. The March crude oil contract, which expired, added 73 cents, ending at a record high of $100.74 a barrel. The intraday high was a whopping 101.32 a barrel. Yesterday, crude oil futures gained $4.51 a barrel. And taking a look at the April crude oil contract, which ended unchanged on the day at $99.70 a barrel. Meanwhile, the market is awaiting tomorrow's EIA petroleum supply data, which will be released at 10:30 a.m. Eastern Time. And in other petroleum products, March gasoline fell 1.79 cents, ending the session at $2.5852 a gallon. March heating oil fell 0.68 cents to settle at $2.7546 a gallon. Meanwhile, March nat gas futures were down 1.2 cents, ending at $8.0965 per million BTU. Over in the metals complex, COMEX gold futures ended higher, rebounding from earlier weakness. The April gold contract added $8, ending at $937.80 an ounce. In other metals, March silver was up 2 cents, ending at $17.76 per ounce. Meanwhile, May copper was down 1 cent, ending at $3.72 per pound. And after rallying at record highs in recent sessions, April platinum fell $14.30 to end at $2,138.80 an ounce. This afternoon, we're joined by Derek Fry from O&F Futures and Options. He'll recap today's session in energy and metals and also give us his short-term forecast.
Okay, recapping the action we saw in the metal and energy pits today. I'll start with energy. Obviously, today is a monumental day. We pushed and closed well through $100 a barrel. Closed at about 174 on the front month. Our models had, for those that have been following along, had projected to move up to 100. We've made it here. We are expecting a pullback, although we do see the potential for a blow-off move here that could carry us 2 or 3 or even more than that dollars higher in a very short period of time. It basically blows off and catches a lot of buy stops, takes out a lot of shorts, and baits in some new fresh longs above 100. After that blow-off that we go through, which we'll probably go through it for the remainder of this week, especially because of the delayed EIA data coming out now tomorrow, we will likely see, like I said, the blow-off move take shape for the remainder of this week, and then next week look for a pullback to begin, or at the very latest at the end of next week to see the pullback start to come. So overall, I would not chase crude oil above 100 right now, is I guess what I'm saying as the bottom line. and be more apt to fade any further pushes up than anything. That being said, don't look for a massive correction either. The correction we're looking for is probably only going to carry us to about $95 at best. So just be very careful with these current levels. This $100 level is a psychologically important level. We also have an OPEC meeting coming up at the first week of March, so that's going to obviously influence things as well. So just be very cautious with it. Again, I want to repeat: don't chase this market higher right now. I'd be very, very careful with any new longs put on over $100. So anyway, also turning briefly to heating oil and unleaded to some degree. Those markets are also very overbought at these current levels, and I'd be very cautious with them as well. I would not initiate new longs up here in any of the distillates. Really look to fade these rallies for the short term, and look for a retracement here in the next over the course of the next week to week and a half. Moving over to metals, we saw a strong push yesterday in gold that was unable to follow through again today, for the most part at least. We saw a little bit of follow-through, but not anything significant. We still believe that the highs above 940 are going to hold. Basically, anything below 950 really should hold in terms of a resistance level in the short term. We continue to be sellers at these high levels, looking for a retracement just back to 900, possibly a little below that, and then look to cover and go long again below 900. So I guess the bottom line theme for today is to be fading these rallies, not chasing them.
That was Derek Fry, head trader at ONF Futures and Options, with his commodities commentary. And that's it for today's edition of PM Exchange. I'm Remy Hokie. Join us tomorrow morning for your latest news update right here on ForexTV.com. Have a good